Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, this is going to be a beginner's guide. This is going to be a crash course for swing trading stocks. So if you're just starting out or you've been trading for a while and you don't know a good strategy or mindset or approach when it comes to navigating and trading the markets, we're going to be breaking down kind of swing trading as a whole and kind of my mindset before I trade, as well as the strategies that I use. So I hope you guys all enjoy it. If you guys do, hit that like button and subscribe. Like and subscribe right now. And if you want to learn more about swing trading, I highly recommend you guys go check out my swing trading school, where you guys can learn strategies, mindset. Pretty much, we have private live streams, we have a group chat. And the thing is I don't believe in alerts or anything like that. I teach you how to trade, and I think that's a huge difference, because a lot of people online think that courses are scams or, whatever it is. But no, it's a mentorship where you guys can ask questions, and honestly, it just kind of cuts down on that learning curve. So you guys can use code HALF to get 50% off. So check that out, and let's jump into this here. So swing trading, what is it? How do you do it? So in simple terms, swing trading is when you buy a stock. Now, I swing trade stocks. Some people can swing trade ETFs. Some people index funds, Forex, crypto. But for me, I swing trade stocks. Now, on average, I hold my position from anywhere from 6 to 9 days. Now, when you buy and sell a stock during the same trading day, it's a day trade. Now, when you buy a stock and you hold it for more than a year, that's a long-term investment. It's a different style. It's a different strategy. And then you start holding through earnings, and you have to, understand the stock a lot more. You care about it long term, right? Because you're holding it for a longer time. So on average, I do hold my positions for anywhere from 6 to 9 days. Now, how do you get started with swing trading? If you're just starting out, what should you do? So a lot of people think that with trading, you just fund an account, you trade random stocks, and you make money. No, swing trading, that's not it. Swing trading, you have to treat it like a job. And what I mean by that is you have to put in the hours, and you have to invest in learn. Treat it like a doctor or an engineer or any profession. You have to have experience, and you have to practice. And imagine a doctor going into surgery without a game plan or anything like that. That's going to be a very, very unsuccessful surgery, and it's going to be not very good. Trading is the same thing. It's a way to get in and out of positions with confidence and kind of knowing what's going on. So I do think if you're just starting out, there is a lot of things that you guys can do to cut down on that learning experience. The first thing that I would recommend doing is to learn as much as you can. You guys, by watching this video, you guys are already taking that initiative to want to learn. After you do that and you can learn, watch YouTube videos, take courses like mine, but not even that. The next thing that you guys need to do is pick a broker. A broker is the way that you guys buy and sell your positions. Now, there is so many brokers out there. The one that I use is Moomoo. They're absolutely fantastic. They have great charting. They have great scanning. They have a great platform. But more importantly, what they offer is something called paper trading, where it's using simulated money to practice your trades. Like I was talking about a doctor, having a way to practice and not lose money is a great way to, one, learn the platform so you can understand the broker you're using. On top of that, learning a strategy and find a strategy that works well for you. A strategy that works well for me might not work well for you. We're all different types of traders. So the biggest thing that I would want to tell you is when you watch a YouTube video online, or even this video, pick bits and pieces from it. You don't have to copy my exact strategy. You just have to pretty much pick bits and pieces that you like or understand, or you think that could make you money. Because at the end of the day, that is our job as traders, is to make money. We have one job, and that's to make money in the market. We don't do it because we want to do it. We don't do it because it's the end thing to do. No, we do it to make money, and that is the mindset you should have. Getting on track with mindset after you guys paper trade, and I would highly recommend doing that for 6 months to a year. Put in those hours. trade in all different types of market conditions, because then when you actually have real money, then it's going to be way better, and you're going to know exactly what to do. It's going to be, a way better thing because you've already traded that in a simulated account. So now you guys can implement what you learned with a real account. So after you guys paper trade, what's the next approaches? So I do think the next thing that you guys should do is actually do something called the one share trade. What you do is you fund an account like Mumu with like $50, $60. Now, what you do is instead of buying thousands of shares right off the rip, no, you buy one share. What this does is it slowly introduces capital, because as you paper trade, you're going to understand that there's no emotion tied to that money. You don't really care if you win. You don't really care if you lose. There's no emotion tied to it, which that's how it should be. But the second, I am telling you, the second you see your account go down in value, your emotions are going to set in. You're going to say, what am I doing? But if it's only one share, that's all right. And the only thing, after you learn a strategy and you make $1, the only thing that is separating you from making more money isn't your strategy, because if you're profitable and you made that $1, it's just going to be your account size. So as you grow your account or just deposit more money, your account will compound and grow a lot larger. So enough of the chitter chatter. Let's jump into the strategy that I love and one that I would highly recommend all types of traders learn or understand here. So this is a recent trade that we took here, and this is on Procter and Gamble. Now, one of the reasons here why I love it is we like an upward trend, right? So the stock, as you guys can see, has gone from about $138 all the way up to highs here at $162. So generally, it just goes up in value, okay? So what we look for is a stock on an upward trend that is sold off down to some level of support. So support could be a variety of things. It could be price support, which if that just say a stock gets a lot of buying pressure at $1 for an example, then in the future, when that stock sells off to $1, there's a higher indication where you could get buying pressure at that price, so you can make some money off that. Another way, you guys could find a support line is by using indicators. Indicators are things that traders and hedge funds use to get a general gauge of what's going on with the market. So for me, I don't like to have a million different types of indicators. I find it overwhelming. I find it confusing. And honestly, when I have indicators on my screen, and if I have a bunch, your screen will look crazy and it's going to be overwhelming. It's going to be daunting. And so what I find is 3 to 5 indicators is kind of like that golden sweet spot where you have enough to understand what's going on, but you don't have too many where it clouds your judgment. So the indicators I use, it's very simple. I use this blue line, which is the 90-day moving average line. I used the red line, which is the 200-day moving average line. Then I used the green line, what we call an RSI line. So the moving average lines, what are they? So I mentioned the blue one, which is the 90. So pretty much what this is they take the previous 90 days closing prices, they merge them together to form this line. This line acts as trend indication, so you can look at it and instantly know the direction of the stock, right? The second thing it acts as is support and resistance. So like we mentioned, support. Support is where we get a lot of buying pressure at it. Resistance is the complete opposite. It's selling pressure. So you guys can see Procter & Gamble sold off down to the 90-day moving average line. You guys can see it consolidated here for a minute, and then the stock rallied its way up. Now, as we look out, you guys can see that there is tendencies of this using support in the past, right? Hitting it several times. It's not perfect, but generally, having these moving average lines will just give you a little edge, right? You guys can see hits it several times, establishing a lot of support. You guys can see when the stock fell below it, it acts as resistance. Where it hits it and we get selling pressure. It eventually broke out, tapped it as support again, and continued to rally its way up. So for me, we took a position near and around 155. And with this trade here, I hopped in near and around this 155 area. We set our stop loss, so the max amount of money we're willing to lose. pretty much just below these candlesticks, near and around 150 to 153. We risked about $1 to make $3.86. Now, one of the reasons why we actually took this position, as well as understood where the profit is, it's very, very simple, is we try to take profit at a resistance line. You guys can see it hits this 160 area several times and just couldn't break above it, forming that resistance. So if you're going to sell it, you're going to try to sell it at the resistance, and that's kind of the plan and mindset I had with it. So you might be saying, well, Carter, how often does this happen where stocks sell off down to moving average lines and you take a position? Well, actually, it happens quite often. This is a recent trade that we took here on Shopify. And you guys can see it sold off, but instead of the 90-day moving average line, it sold off down to the 200-day moving average line. Like we mentioned, when the stock is above it, like it is up here, we see buying pressure. But you guys will notice that it actually sells off below that 90-day. So like I mentioned, support and resistance. So when it hits that 90-day moving average line, but from below it, it acts as resistance, hitting it and getting selling pressure. So taking profits at 74 would have been the absolute go-to move here. This is a great trade, nice upward trend. We've traded this stock in the past several times here. You guys can see it has a bunch of support at that $72 mark. So really, we could see a little buying pressure coming soon, but overall, guys, this is a very, very easy example of how you guys can swing trade and start implementing these little tips and tricks into your trading strategy here. And you might be saying, Carter, how do you add those indicators? Very simple. On most brokers, you just got to go to the indicators management tool. On Moomoo, the broker I use, it's that gear icon, going to manage indicators, clicking these EMA lines, as well as finding that RSI line right down here, as you guys can see. Once that clicked, you guys will see them form in here and you'll be good to go. You guys can obviously adjust them with your colors and all that stuff. But guys, this is a very, very easy example and a beginner's crash course to get started with trading. Guys, if you want to learn more, check out my school, and we'll see you guys in there. Like, subscribe, and we'll see you guys in the next one. Take care.